Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
An auditor is a professional who arrives immediately after the battle is lost and meticulously bayonets the wounded. Free markets are beautifully free right up until the moment a bank gets a little too big to fail. EBITDA is the creative financial metric we use when the actual net profit is simply too depressing to discuss in public. Diplomacy is the delicate art of telling someone to go to hell in such a perfectly polite way that they actually ask you for directions. Inflation was declared dead. It simply took a sabbatical.
History has an awkward habit. When blockbuster IPOs dominate headlines, markets often aren't near the beginning of a bull run, they are near the champagne and regret phase. The Financial Times chart is fascinating because many iconic listings, from Ford to Blackstone, arrived close to periods where the S&P 500 later struggled. Why? Because giant IPOs tend to appear when valuations are rich. Liquidity is overflowing and investors start believing every growth story deserves a private island valuation. That doesn't mean IPOs cause crashes. They're more like market equivalent of guests ordering dessert after a 14-course meal. Sentiment is already running extremely hot. The most interesting part of SpaceX's numbers isn't the rockets, it's the business mix. In 2025, revenue hit $18.7 billion, but the company still posted a $4.9 billion net loss. Why? Because SpaceX is simultaneously building a launch business, a global internet network, and an AI infrastructure empire that consumes capital like it's an Olympic sport. Starlink connectivity is a real cash machine here, generating over $7.1 billion of EBITDA in 2025. Meanwhile, the AI segment is still deeply loss-making, which in today's market oddly makes investors more excited. Apparently, burning money is acceptable if GPUs are involved. The truly wild number is the estimated $28 trillion total addressable market. At that scale, investors aren't valuing SpaceX as an aerospace company anymore. They're treating it like digital infra for the next century. India now has 1,682 individuals worth over 1,000 crores, according to the Hurun Rich list. And the really striking part, wealth creation is no longer just a Bombay-Delhi phenomenon. Smaller cities and first-generation entrepreneurs are showing up in increasing numbers. There are now 162 Indians worth over 20,000 crores, while thousands more are climbing rapidly through the 250 to 1,000 crore rupees bracket. In other words, India's economy isn't just creating consumption anymore, it's manufacturing capital owners at scale. This is what long bull markets, formalization, startup growth, and financialization look like in real time. Equity ownership, private businesses, and real estate appreciation have created a new class of ultra-rich Indians faster than most policymakers probably expected. For the first time since 2013, the RBI has spent 2 straight years selling dollars, with roughly $54 billion sold in FY26 alone. That's essentially the central bank acting as a shock absorber for FPI exits, FDI outflows, and a very stubbornly strong dollar. Think of it this way. While foreign investors were heading for the airport, the RBI was quietly standing at the currency counter, making sure the rupee does not have a public meltdown. Now the scary-looking forward sales number needs context. A big chunk comes from intervention in the offshore NDF market, while actual dollar movement is far smaller, mostly rupee settlement exposure. So the headline numbers look like a blockbuster action movie, but the real balance sheet risk is probably closer to 10% of that size. India isn't just a large social media market anymore, it's becoming the operating system for global internet growth. We are talking 535 million WhatsApp users, 500 million plus YouTube users, 480 million Instagram users, and over 400 million Facebook users. At this point, if a platform succeeds in India, Wall Street calls it global scale. If it fails here, investors suddenly discover the phrase monetization challenges. What's remarkable is that India contributes roughly 400 to 500 million users per major platform, effectively acting as a growth engine for Silicon Valley's ad revenues, creator economy, and AI training data all at once. JSW Steel is now officially the world's most valuable steelmaker, with a market value of around $30 billion, edging past giants like Nucor and ArcelorMittal. That's a remarkable shift. For decades, global steel was dominated by China, Europe, Japan, and the US. Now an Indian company sits on top. Proof that markets are increasingly betting on India's infra boom, manufacturing push, and long-term domestic demand story. Let's be honest, steel is usually considered one of the least glamorous businesses on earth. Nobody writes movies about blast furnaces. Yet investors are rewarding JSW like it's a tech company with molten metal.